So good morning and welcome to the Pantera Minerals Investor Webinar. I'm Jane Morgan, the Investor and Media Relations Manager, and today I'm joined by CEO Matt Hansen, who will run through the investor presentation that was lodged with the ASX this week. To ask a question throughout today's webinar, please use the Q&A function, which can be found at the bottom of your screen. Matt, I'll hand over to you.
Morning, Jane. Thanks for the introduction and thanks to everyone joining. As Jane said, Pantera Minerals put out a new corporate presentation earlier this week, so we thought it was a great time to hold a webinar and sort of give an update where the company is at, especially after the investment into the lithium brines in August. So I'll kick off. Usual disclaimers, but what I will point out is an extra disclaimer here which refers to lithium brine values, which I'll talk about in a sec. Okay. The company overview. So Pantera listed a bit over 2 years ago. At that time, we had 3 listing assets. Sorry, 4, but one we've recently dropped. There on the right-hand side, which was our Yampi copper gold project up in the Kimberley of WA. We have our Willarana manganese iron project, which is in sort of the middle of WA, and we have what's called the Hellcat base metals project, which you can see there as well. But more importantly, in August, like I said, we took a strategic investment and moved into lithium brine space. Pantera had been doing some DD for a little bit. More importantly, it's been focusing on Texas, and then an opportunity came for us to take an investment in a company called Daytona Lithium. They're a privately held company who had been leasing quietly in Arkansas, but more importantly in what's called the Smackover Formation. The Smackover Formation is an oil and gas formation which is being tapped out from the oil, but it turns out that the brines in there is full of lithium, and more importantly, it's sort of hotting up. So we kind of see this as the place to be for lithium brines in North America. We really like it because it's got some big heavy hitters right next to us, as you can see in the map there. Bit of the corporate overview. I'll let you all read that at your own leisure because we're keen to talk about the Superbird project. Okay, so here we are. Like I said, in August, we took a 35% investment in this Superbird lithium project. Sits in the Smackover Formation. At the time of our investments, they had privately leased like 5,000 acres. And for those of you who don't understand how it works or heard about it in the US, minerals are owned privately. It's the private individual who owns the minerals as opposed to the state. So you need to enter into a relationship with the mineral owners and form a lease agreement. So Daytona Lithium were quietly doing that for about 3 to 4 months, picked up a good little beach of 5,000 acres. And then in May, really headed up there when we saw Exxon move in. So it's in Arkansas, it's 100 plus years of oil and gas exploration. So transitioning to lithium brines is not unusual for the oil and gas industry. It's just pretty much the same. It's just more environmentally friendly for them. So here we are. We consider it sort of a shale 2.0. If people remember the shale boom, right now it's a bit of a land grab. You can see Pantera on the left, right to us. We've got Exxon. I'll speak about a bit more about them in a minute. We've got Standard Lithium. We've been doing some great things. You've got Albemarle in there as well, and Tetra Technologies. So Daytona Lithium, their leasing program is driven by a really good IP database about historical wells. So what we do know is that the Smackover Formation exists. We know where it is, and we also know that historically it's got some high PPMs, which what we're chasing is lithium. Move to the next one. So once again, a bit more of this formation, and I really like the map on the right-hand side. It actually shows you why we're here. See, Pantera is there. Next to us is Exxon. For those of you who haven't heard of this, in May this year, Exxon entered the market, took over 120,000 acres, which were held privately by Galvanic. Reportedly, it was for $100 million US, but word on the street, it's a lot more. And you can see that there's 3 historical wells in that area. They're called Tisdale, and they're anywhere from high 400 to 300 ppms. And then you move up to where Standard Lithium is, and they've had an exploration program since early February where they've drilled 5 wells, 3 new wells, and re-entered 2 extra wells. And these guys are getting high ppms from 160s all the way up to high 500s. So What we do know is, once again, it's Smackover formations there, the brines are there, and the lithium content is there. So for us, it's an exciting area to be. We've got a strategy of increasing the acreage. And fortunately for us, the way it works in the US, you need to understand who the mineral owners are. And we entered into a thing called an exclusive abstract agreement with a guy who tracks who owns those mineral leases, which, like I said before, it's all privately owned. He's able to tell us pretty quickly who owns the minerals. So we've got a pathway to really build the footprints. So it's really just high area of heights right now. It's a land grab. I said, we think this is where you need to be right now. If you want to be in lithium brines, this is where you need to be. Like I said, there's some big players in there, and Exxon next to us, Standard Lithium and Albemarle. To put it in perspective, Exxon are 4.5 times the size of Rio, so they are right next to us. And also this week they've gone and permitted 3 wells, so they've got plans to drill 3 wells just now, and it's an exciting place to be. We love it because it's lithium brines. It's got some high ppms, and right now Pantera, with investment, is the only ASX company in this area. Also, Arkansas seems to be the place to be at the moment. Like more recently, we heard the Arkansas governor will come out and see that the state's moving at breakneck speed to become the lithium capital of America. You're working in an area that's got 100 years of oil and gas production. So turning from oil and gas straight into direct lithium extraction is not a wide concept for them. They understand it, they get it. It's a business-friendly environment. It's full of farming areas. And oil and gas, the Arkansas Oil and Gas Commission are fully supportive of Australian company being there. I had the opportunity to jump over there early this year when we were looking at the project and got to sit down with some of the mineral owners. They're just farmers who got their 100, 200, 300 acres of farm, crop farming, and they're excited to be able to lease to an Australian company as opposed to the big behemoth next to them. B, to be able to lease their minerals and be part of the EV revolution. However, the underlying fact was, great to be involved in the green technology and moving forward, but do not want to own electric vehicles. So for them, it's all about status quo. Just a couple of the sort of things. The next couple of slides are really about the lithium demand and the shorter supply. This is not uncommon knowledge, especially in the US. Like the US is screaming out for more lithium. It's once again why we think we're in the right place. Like not too far from us, you've got Tesla, who just finished off their lithium battery plant in Austin. We're right. We'd be surprised we don't get a phone call from them at some stage in the future once we get moving on. And this is a map I think everyone's really seen. It just shows you the demand for lithium industry in North America. Like it's scattered throughout. All the big players are in there, from Toyota to Samsung, and I'll let you all look at your ease. But like I said, we're right in the thick of it. We think we're in the right place at the right time. I mean, this is a really great slide. It shows you the concept of direct lithium extraction, how it works. I kind of think it's probably about 3 production wells to every 1,000 acres, 1 disposal well, and then the production plant. The Smackover formation sits about 8,000 feet. So, while we think that's deep over in the US, that's nothing for them. 3 wells down, brine comes up, goes through the extraction process, and then back down through the disposal well. Once again, it's environmentally friendly. It's better than evaporation, and it's where we think that industry is going. Backed up by Mr. Lithium himself. It's the place to be. This slide sort of sets that difference between mining, evaporative, and DLE tech. You can see that mining to evaporation, it's weeks to months to years to coming in production, whereas DLE, it's hours to days to bring it into production. It's a very easy concept, especially when you're in an area of Arkansas. There's just turns it from oil and gas, which is about 80 years, to which they've got an industry supporting putting it straight into lithium brines and direct lithium extraction. It's not much of a different movement from what they've been seeing in the past. I'll just quickly touch on the Australian projects. Like we said, we've still got our Willamette project, which we're really excited about. It's manganese, and when we did our drill program, we actually pushed in through a couple of holes into some channel lines. So unfortunately, we're not able to get back out there and do a new drill program, although it's been got a programs in work and it's permanent at that point of view. We still need to do heritage surveys. So we won't be out there until next year, just because recently was in WA. There's been some changes to the Heritage Act, and all heritage surveys have just sort of been put to stop until next year, until that's settled, which is fair enough. But still pushing through the project, we're still liking it, and it's still part of our portfolio. And I'll quickly touch on our Yampi and Hellcat project. Like, they're still valuable projects to us. We just haven't been able to get into Yampi because of the area we're working in. We want to get into is in a defence area, and defence require us to have some access agreements, and they've been doing some war games up there, so it's been put on a hold for a little bit. With Hellcat, we still really love Hellcat. We're in the process of having a review done, just telling us we should undertake that airborne or ground gravity surveys, and as soon as that comes back, we'll be able to work out what the next step for us for that. What's the next steps and the milestones of the company? Like, right now, we're really focusing on the Superbird brine project. We continue to add acres each week. We sort of add between 200 to 500 acres each week, just depending on how much we get back. So I think this week we had 300, so we're inching closer to 10,000. I think 10,000 is a really good milestone. We are in chats with We've identified an existing producing well in our area of interest. It's currently only producing 1 barrel a day. It's not in the same formation we want to be in. So we're having discussions about that well owner, about re-entering that well and pushing that down a bit further. And what that would tell us is allow us to do some brine samples. And really that's what we need to know, is like just to confirm the brine samples and the flow rates. When we announced the project, we said we're undertaking some DD just to assert if we had enough information to put out exploration target. Fortunately, we do, and historical data. So Daytona has commissioned an independent company to do an exploration target for us, and that should be out within the next 5 to 6 weeks. These guys are based in Canada, so it's pretty new to, it's not new to them, they understand it, and they'll be to JORC code. And we're in, like everyone, we're discussing with other companies about what the best DLE tech is to use. Fortunately for us, Pantera has the same chairman, Barnaby Edge and Warburton, who's the same chairman as AZL Lithium. They've got a pretty big lithium brine project up in the prairies in Canada, so we're able to understand their tech, what they want to do, and some of their thinking. And they've got a really fantastic, world-class lithium research center in Arizona and Phoenix, so we're able to understand what they're doing there, and we don't need to invent the wheel. So that's really us for us.
Wonderful. Thank you for that, Matt. We'll jump into some questions now. And again, webinar attendees, please use the Q&A function, which can be found at the bottom of your screen. So first up, does Pantera plan to take on a more active role in the exploration program at Superbird? Or is this going to be
thanks, Jane. We do. We are actually involved with it as it is. We have a weekly meeting with there's a recently appointed landman. Well, he was casual, but the team went him on full-time, a guy called Cleve Thomas. So over there, he's the guy who goes out and speaks to mineral owners. So we have a weekly call with him to understand where things are at. There's a WhatsApp group of him as well, updating us. We're intimately involved with the leasing strategy right now, and having the oil and gas experience that I've got, having being, in-house counsel of oil and gas company before, and then the experience that Barnaby's got of drilling, 20 plus wells in the US. We're intimately involved in the leasing strategy and understanding where the wells are going to go. So this really fits our wheelhouse.
Thank you, Matty. There's 2 parts to this question. So what size of land holding is Daytona targeting? And is the strategy to increase the land holding to a significant footprint, however, maintain a project size that the company can viably explore?
Yeah, they're great questions. Like I think we've got an abstract agreement with that abstract guy to give us 50,000 acres. So we really want to get as close as we can. Obviously, not every person wants us to lease, but we are able to pull them in when you unitize. So I think anywhere from 30 to 40,000 plus is our target. Put in perspective, you've got Exxon 120,000 acres. That's a big land footing, and so I think 40 to 50 is great. We would love to take the rest of it. We're currently in negotiations with Daytona, and obviously that's got to go to shareholder approval. As we said in our recent announcement, shareholder and regulatory approval will be required, but yeah.
Wonderful. Okay, so I'm jumping around a little bit here. In the presentation, you mentioned DLE technologies. Can you please elaborate on how Pantera plans to explore and capitalize on these?
Yeah, it's a great question. I mean, there's a lot of DL tech out there. We've been approached by a couple of different companies. We can't sort of say who they are, it's confidential, but they're keen to get involved in any level. And for us, it's understanding, like any lithium brine, it's all a bit different and each technology works a bit different. So we have initial discussions with who's available and who wants to get involved. But for us, it's really getting a brine sample and seeing how each brine sample runs through each tech and what works out the best for us. So we haven't settled just yet, but there's many options out there.
Okay, next one. So what's the process to have drill permits approved for the Superbird project?
Yeah, look, that's a really good question. The US is, like I said, 100 years of onshore oil and gas. They understand it. They have a real easy pathway of getting wells and oil and gas wells permitted within a month and being able to drill pretty quickly. It's not a situation in Australia where it's, you know, a 2 to 3 year process of getting an onshore well permitted, plus the environmental, you know, red tape you go through. You can be drilling an oil and gas well in the US, drilled and producing within 2 to 3 months. So, like I said, we've identified an existing producing well in the area. We're in negotiations with those wells owners about re-entering that and pushing it further down. So, you know, hopefully possibly doing that early next year. It's about just getting access to it, but nowhere near as a long pathway just say in Australia for onshore.
Wonderful. Again, another one that's come through a few times and you've touched on it, but what percentage does Pantera aim to increase its Daytona lithium holdings to?
I mean, we went and talked to Daytona. We'd love to get all of it, but we're just going to see if we can get approval from the AS, get a review approval and get it through shareholder approval. So right now we're 35% was an initial dip in the toe in the water. So we want to have a discussion and see if we can get a lot more of it.
Thank you. Another one that you did cover in the presentation. However, so what level of government support is there for battery metal supply chains in that region? And are there any government incentives available for explorers and developers?
Yeah, there are. I mean, there are a lot of government incentives available from the federal level in the US. We've had some discussions with some providers who are able to assist that process. So look, those discussions have started. There's a lot of funding out there. But for us right now, like, we think that's great. But for us right now, we're just focusing on increasing the land holding.
Wonderful. And I think just finally, so you're on the right slide for it as well, you know, what should shareholders be looking forward to for the next 3 to 6 months?
I think next 3 to 6 months, it's really seeing the Superbird projects increase its land holding. It's, you know, it's seeing the potential negotiation from the re-entry of a well. It's releasing of an exploration target in the next 6 or 7 weeks, I suggest.
Wonderful. Well, that looks like all the questions have been answered. We want to thank you all for joining us today for the Pantera Minerals Investor Webinar. If we have missed any of your questions, please feel free to reach out by the contact details on the bottom of our ASX releases. But we look forward to hosting you next time.
Thanks, Jane. Thanks for listening.